I want to leave you with a tidbit of advice that's going to give you enough knowledge, and this one tool alone will make sure that you are making the right investment. Welcome back, passive income investors. Today, this video is for you, the person that doesn't want to do a self-managed fund. If you are into investing, you're getting into investing, maybe you're not somebody like me that wants to manage and buy individual stocks. Maybe you're somebody that doesn't have the time for that, and you've decided that you want to essentially give your money to, say, what would be called a mutual fund, or maybe just put it in a simple ETF. Well, if you're going to get somebody through your bank or a financial advisor to help you invest this money, I want to leave you with a tidbit of advice that's going to give you enough knowledge, and this one tool alone will make sure that you are making the right investment. There's two things you're going to ask when somebody sits you down and when you're examining different mutual funds. There's many ways you can set them up, but there's only one question that truly matters. Has this fund performed equal to or has outperformed the S&P 500 index over a 15-year term? That is it. That is the tool that is going to keep you from giving the wrong person your money. If the person you're giving your money to thinks they can manage it better than the basic index funds, well, they're gonna have to prove it to you guys. So make sure you ask, because these guys will screw you if you are not careful. Any fund you put your money into, guys, has to equal to or outperform the S&P or simply a Vanguard 500 index fund. So when you walk in and you sit down with these people, make sure you ask, does this fund outperform or perform equal to the S&P 500 index or something like a Vanguard 500 index fund? Write that down. Or a SPY. There's also something called the SPY, which is another S&P 500 index fund. Essentially, guys, these are the 500 largest companies in the US, and they have generally paid out roughly 8 to 10% a year consistently since inception, with the odd exception for some years doing better and some years doing worse. I.e., if you were in the markets in 2017, you killed the game, but if you were in the markets in 2018, there's a good chance you didn't make a dime. But we're in this for the long haul, guys, and my guess is you are too if you're trying to build wealth, maybe for your kids' education, maybe you plan on having a kid, you want to make sure you can go to school, or maybe you're looking for your own retirement, or maybe you're just somebody like me that's 26, guys, trying to bank as much money as you can, and you want to make that extra dime on it. If I were to do anything, if any day out of the year, guys, all of a sudden, well, any day of the year, maybe over time, if my investment started performing worse than the S&P index over a consistent amount of time, I would have to have enough common sense to tell myself, I don't know what I'm doing, I need to stop, and I need to go to what I know works. It is the deadfall way out. So if you are even somebody like me, guys, that buys individual stocks, make sure if you screw up enough and years go by and you're either losing money or not comparing to the S&P 500, it's time that you stopped and you put your money in the S&P, guys. Other than that, there literally is nothing else you need to know. You can use YouTube videos, my channel, to help teach you guys more about individual stocks and my own personal portfolio. It's not often you guys get to see me in a suit. I'm a full-time magician going to do some shows, and I figured I'd just do a little bit of a different video for you today. This is just a quick tidbit video as an extra post. I hope you guys enjoyed. Stay cool, stay awesome. I'll see you tomorrow.